My friends, I want to ask you a small question. Are you ready? Do you remember that bag you tied with your hands at the market a few years ago? It was full to the brim. Now you pay 80 for the same bag, and it doesn't even get that full. That is inflation itself. Like a thief in the night, it sneaks into your wallet without a sound. And when you wake up in the morning, your money has shrunk a little more. I learned this not from books, but from my own life experience. I started from zero, made mistakes, burned through money, lost, but eventually figured out the rules of this game. And today, I will share those rules with you in the most clear and honest way. The good news is that you don't need $1 million portfolio, an economics degree, or Wall Street connections to fight back against it. All you need is a few right decisions and a little patience. Whether you earn $1,000 a month or manage $10,000, these strategies apply to everyone. If you are serious about wealth, stay on this channel because there are 10 points ahead of you and the most powerful insights come toward the end. Let's get started, brothers and sisters. Point 1. Never let your money sit idle. Holding cash feels safe. I completely understand that. I thought the same way for many years. But in times of inflation, money sitting in a safe is like an ice cube left on a counter in the middle of summer. It melts away without you even noticing. If you deposited 10,000 lira 5 years ago at nearly zero interest, today you can't buy the same fuel, the same grocery basket, or even the same streaming subscription with that money. Every idle lira is silently costing you. Inflation is not neutral. It always stands against passive money. So move that money to safe and liquid places that can at least keep up with inflation. Treasury inflation-protected securities, short-term bonds, or high-yield savings accounts offering serious interest today are at the top of that list. You store ice cubes in the freezer, not on the counter. The logic is that simple. Point 2. Build yourself a solid shield with dividend stocks. You thought it was going to get technical, but it's not. There is a very simple logic here. Please listen. When you own shares in strong companies that pay regular dividends, you have essentially built a business that pays rent on your money every 3 months. Put 10,000 lira into stocks with a 4% annual dividend yield, and 400 lira of passive income comes to your door each year. While inflation makes everything more expensive, your money sends you a small but regular thank you check. The real secret is to choose not just companies that pay dividends, but companies that increase that dividend every year. Many well-established companies in major market indexes have continued increasing their dividends for decades, despite crises, inflation waves, and market crashes. Ignoring this stability would be a big mistake, my friends. Point 3. Use real estate in a measured and intelligent way. Let me give you a real example from my own circle. Someone I know well bought a modest rental apartment 10 years ago, with monthly rent starting at a reasonable figure. Today, the value of that apartment has nearly doubled, and the rent has moved up every year along with inflation. He had a fixed loan. His monthly payment stayed the same, but as inflation passed, that burden became lighter in real terms. I'm not trying to convince you that you need to be rich and you don't need to own 10 apartments. Even a single modest property starts working for you when inflation hits, the rent rises, the value increases, and your fixed loan becomes lighter over time. I call this paying today's inflation with yesterday's money, and it is one of the smartest moves in this game. Point 4. Absolutely incorporate index funds into your life. If there is one simple and universally accessible way to beat inflation over the long term, it is index funds. Major market indexes have historically provided around 10% return per year, well above inflation. Why are they so powerful? Because the companies in those indexes are already on the winning side of inflation. They raise prices, pass costs to consumers, and dominate growing markets. When you put money into these funds, you're not fighting inflation, you're wearing the jersey of the team that feeds off it. When logistics giants raise prices as delivery costs increase, when tech companies grow on the wave of artificial intelligence, your index fund automatically embraces that growth. You don't need to pick winners one by one because you already own a small share of all of them. Point 5. Find and cut your silent spending leaks. Inflation is not only fueled by external price increases, it also draws strength from our own unconscious spending habits. Every lira you waste today is like a soldier deserting your financial army. The most concrete thing you can do right now is this. Open 1 month of your bank statement, mark each recurring payment one by one, and immediately cancel those that add no real value. Did you find 200 lira per month? Direct it immediately to a dividend, ETF, or a bond. You are no longer just saving money. You are starting to activate compound interest, and that is a very different thing. Point 6. Understand bonds correctly and use them in the right place. I imagine your eyes glaze over when I say bonds. I know it sounds boring and uneventful, but when inflation stirs things up, bonds can be your most reliable stabilizer. Treasury inflation-protected securities are literally designed specifically to rise along with inflation. You put 5,000 lira here, inflation rises 6%, and your principal is automatically adjusted upward. It's not as exciting as popular tech stocks, I admit, but it protects your money, and that is sometimes more more valuable than excitement. Think of them like the airbags in your car. You don't want them to deploy, but when they do, you understand that they save lives. Don't tie your entire portfolio to bonds, but don't ignore them completely either. Point 7. Diversify your portfolio with alternative assets. Smart investing entrepreneurs don't look only at stocks and bonds. They also add commodities, gold, and different asset classes to their portfolios. When currencies weaken, hard assets generally strengthen, and this is a fact that has been proven repeatedly throughout history. You don't need to stack gold bars in your basement. A small and measured investment in funds that track gold or commodities is enough. As for crypto, yes, it is an extremely risky and volatile space. You enter it with money you are prepared to lose, not with the savings of your lifetime. Let 5 to 10% of your portfolio sit in these kinds of alternative assets. Even that much creates a meaningful buffer against inflation. Point 8. Automate the system and allow the magic of compound interest to work. Everyone talks about compound interest, but very few people truly embrace it. Put the system on automatic, set up monthly automatic transfers to index funds, dividend stocks, and high-yield savings accounts, and stop relying on willpower. While the system runs on its own, you can sleep and the money keeps growing. If you invest $500 a month into a major index for 20 years, you will surpass $300,000 at average returns. You leave inflation behind not with a single big move, but by allowing compound interest to do the heavy lifting quietly and tirelessly. Point 9. Grow your income faster than inflation. Here is a truth that is a little hard to say but life-changing. You cannot beat inflation by cutting your budget alone. At some point you must earn more. That is easy to say, but it is not an endless rat race either. It is a matter of strategic skill. Invest in a $200 online course, acquire a new skill, take on freelance work, consult, offer a digital service. A single skill you develop can bring an extra $10,000 a year, and that is the most powerful weapon available against inflation. Entrepreneurs do this instinctively. They read inflation as an opportunity. They raise their prices. They open new income doors. You can carry the same mindset as an employee, negotiate your salary, start a side business, grow your value, never stop investing in yourself. The wealthy never play defense. They always play in expansion mode. Point 10, and perhaps the least appreciated of all, play the long game with patience and determination. Inflation truly looks frightening in the short term, I don't deny that. But history always teaches the same lesson. Disciplined and consistent investors have beaten inflation every single time. The wealthy did not panic and flee during every market turbulence because they trust the system and that system works for them. If you withdraw your investments at every shake, inflation wins twice, once through rising costs and once through the growth that slips from your hands. Stay committed to the system, diversify, automate, and keep improving yourself a little more every day. 5 years from now, you will look back and sincerely thank yourself for the moment you made these decisions. I guarantee it. My friends, never forget this. Inflation is not your enemy. It is your harshest teacher. It wakes you up, shakes you out of your comfort, and forces you to be truly conscious with your money. Whether you are in Istanbul, Ankara, or anywhere in the world, whether you have 500 lira or 50,000, everyone can protect their savings, build equity, and grow their wealth. Discipline, patience, and intelligently built systems beat inflation every time, without exception. The question is singular and clear. Are you ready to build your financial freezer before your ice cubes melt away completely? Every video on this channel is filled with information that truly works. If you enjoyed the video, subscribe, like the video, and share this content with the people you care about. See you in the next video.